Up next, we take a look at what's happening when it comes to the markets. Joining us on the desk is Jeff Peterson, the president of Heartland Farm Partners. Good to see you, Jeff.
Oh, it's great to be here.
Let's talk about these markets. I guess maybe let's go back the last 30 days and size up some of the factors of what's been happening, particularly for corn and soybeans. What's driving this?
Yeah, so if we just kind of sit back and take a look at a big picture, if you really kind of think about it, in particular in the corn market, over the last month, we've kind of been in a gradual uptrend. And if you kind of think back in time, well, what kind of changed in there? Well, we kind of had some weather come in there that gave us a planting window early, and then it's like it kind of took it away and gave us some challenges. Meanwhile, all during that time, we ended up having basically the weather wasn't cooperating. The speculative traders were trying to decide, hey, do they want to be long this market or short this market? And then as the technical action was happening in the market, it was showing us some ideas in there from the technical side that, you know, they should step in and be a buyer. And so we're kind of balancing that tightrope between, do we have enough moisture? Is the planting progress going fast enough? Do we have enough demand out there? But meanwhile, we've just kind of been gradually grinding higher. Now there's been some setbacks, but it's just kind of been a gradual grind up.
From those factors, what does your crystal ball tell you about the next 30 days? Do you think we'll continue to kind of grind higher at this point?
Yeah, so as we dig into that and really kind of look at that, I think it's going to be some pretty choppy action. I mean, if you really look at it, we're seeing hints of that happening on the corn market. We've seen it definitely happen on the wheat market. And as you kind of dig in and look at that, if you look at that, you'd say, well, what's going on out there? Well, U.S. planting progress, you know, that's a big item. You know, we're sitting at about 70% planted on the corn. That would have been, as of this past Monday, about 52% on beans. A lot of acres left to plant yet. And the market's trying to size up, really what it's doing is trying to say, can we end up having a decent sized crop based off of when we're getting this crop planted? So I think we still got some more in this market to kind of grind us a little bit higher here yet. It's not going to be a straight up path. But then the thing we have to remember, at a certain point in here, when the market does think we've kind of built in enough premium, our moisture situation's a lot better than it was, and this crop's getting put in okay. So that can still mean some pretty good sized crops, you know, out there down the road.
Here early in our conversation, I want to get to a viewer question that came in. It was kind of fascinating. A viewer wrote in saying, okay, he heard a commodity broker saying, watch out, because if the funds do buy this, the market is going to rally. But the viewer expressed some frustration, saying, well, how are we supposed to know what the funds are going to do? Your thoughts?
Well, that's a great point. You know, we talk about that a little bit on show, but let's kind of break that question apart. So first of all, when we talk about the funds, generally what we're talking about is the speculative traders. And in particular, what we're talking about is the trend following or the managed money. And what that is they're trying to buy the market when the market looks like it's going to go up. They're trying to sell it if they think it's going to go down. So our first hint to what they're doing actually comes out every Friday, and that's in the Commitment of Traders report. That traders report comes out, and basically the traders of a certain size are required to report their positions, or the brokers report their positions, and we keep track of that. And so for instance, this past Friday, and keep in mind when that report came out this past Friday, those results were as of the previous Tuesday. And what it said is that really the funds on the corn side were short the market about 71,000 contracts. Keep in mind each contract is about 5,000 bushels. They were short 42,000 contracts of soybeans, and they were short 28,000 contracts of wheat. So we can monitor those positions each week, but what they've been doing, and the trend is more important. So they've been physically buying back this market. And a key thing to kind of think about is that why have they been buying it back? Well, we're coming into that time of the year where you don't necessarily want to be short that market, because if you're short that market, it keeps going up, you're going to physically get hurt on the price side. So what they've been doing is they've been buying it back, but a couple triggers or things to look for is that if they were in and around the 100-day moving average, you know, basically of what the prices have been over the past 100 days, and you look at what that average is, you know, if we break through that and go higher and they're short, they're going to have a tendency to continue to buy that market back. And that's exactly what we ended up seeing across corn, soybeans, and over on the wheat side. But on the wheat, we got to see something else. We got to see them break through that 200-day moving average. And when they break through the 200-day moving average, that's a point where you can generally see the funds sometime then start to build, in this case, a long position. So that kind of gives you a little insight to kind of how they're thinking, Bryce.
Well, let's get to where you think, kind of back where we were a second ago, where you think all this is going. In particular, you watch the USDA reports as those come out. If things hold true when it comes to their supply and demand reports, where could the price for corn and soybeans be headed?
Yeah, well, I think that's a great question. So I'm going to break it apart a couple different ways. So I'm going to take this and say, okay, if we take basically 90 million acres of corn and use 181 bushels the acre, just like they ended up using in the May WASDE report, and we get out to harvest, and we were able to achieve that, and demand is about as expected, price, unfortunately, we'd probably be looking at about $4 December corn futures if that all happened. Now, the market wouldn't go right there right away, but that's what we'd be looking at. Then over on the bean side, if you used 86.5 million acres of soybeans and use a 52 bushel the acre, a lot of debate could happen on each of those. What that would suggest is about $11 futures on the November side when we get out there to harvest time.
So that said, back present day, we did see this bit of a rally over the past 30 days. Should we be making some sales on new crop?
Yeah, I do believe there's a couple things. So let's break that question apart. And I'm going to broaden it out a little bit on you. I'm going to add the old crop into it too. So on the old crop here, yeah, on this move that we're having right now, we do need to be making some sales. Not necessarily today, but on any little sign of weakness we get in this, we do need to be making sales. You know, getting up there in that 75% sold area or maybe a little bit more on that old crop. And then on the new crop side, as we get up higher on this move, yeah, we do need to also be making sales there. And I'll just throw wheat in there. We probably are at a point where we need to be cleaning up some of that old crop wheat that you might still have around. And since wheat harvest isn't very far away for us, we probably need to also be making some new crop sales there too, Brian.